This show is every Sunday night at 8 p.m., followed by our VIP event on Zoom at 9 p.m. Eastern tonight. Tonight at 9 p.m., the show is actually going to be not going on social media. Like the other shows that we do, we put them up on social media a week later. This show is going to be private just for our VIP members. It's going to be about tax loss selling and the January effect and identifying stocks that can have outsized returns here from December into January. So that'll be for VIPs only. If you subscribe to our VIP newsletter, which is at a deep discount to the VIP community, only $35, then you can hear the recording of that. So tonight, first we're going to talk about the market last week, the market volatility, discuss that a little bit. By the way, this is going to be an interactive session. Anyone who wants to contribute, just ask for the mic. You can hit that now and we'll get to you. I know there are a lot of people interested in XSPA, some people in fun. We got CFVI, a couple of my close friends and colleagues on Twitter. I know we're planning on attending tonight, so we'll definitely get to you if you have some comments. So make sure to hit that mic request button and we will get to you. So first, we're going to talk about the market volatility. At around 8:15, we'll move over to XSPA, which is a StoryTrading VIP pick. And at 8:30, we will get into DWAC, CFVI. We'll talk a little bit about GameStop and AMC and discuss the ramifications of all that happening. Looks like we have some technical difficulties again with my co-host tonight. Shivam, keep your hand raised. We will get to you. See if I can get Jared in here one more time. Okay. So regarding the market volatility, this is something we warned about. Jared, can you hear me now? Okay. In any case, in our VIP trading community,
hi, can you hear me?
I hear you.
Okay, I'm back.
All right. So this is something for the VIP community. In our VIP trading room, I've been warning about since early November that I anticipated extreme volatility sometime between Thanksgiving and January. I just sensed a lot of overenthusiasm in the EV space. That's why I exited my air position at 25. I really sensed the market top. And pretty much every year during this time, there's a lot of volatility. So I had advised my community to basically hedge, to reduce their exposure, get off of margin, avoid call options, perhaps do a little bit of hedging using ETFs like PSQ and RWM. That's exactly what I did. I hope a lot of you did that as well. So I actually anticipate this volatility to continue for the next couple weeks. I refer to this period as kind of like the chop. The trade is the chop, meaning one day up, one day down, one day up, one day down. Sometimes you can string 2 up days in a row, sometimes 2 down days in a row. But it's an extremely, extremely difficult environment to trade in, extremely emotional, because these swings are wild. You get, usually the pops are short covering rallies. These stocks will be up 5-10% on a green day. And you think, oh, it's all over. And you're tempted to jump back in. And the next day it's like down 5%. I've been through this many times. I've been trading for like 25 years. By the way, if I didn't say it, my name is Ben Rabizadeh. I'm the founder of StoryTrading. I've been doing this for about 25 years. I've seen this many, many times. Hey, if you're a great trader and you've identified that we're in the chop, great. I mean, you can make a ton of money in this environment. It's extremely challenging. So I decided myself to reduce my exposure in my trade account, have some of a cash position. I'm currently short the market as well in my trading account, even in my IRA via PSQ and RWM. And you know what? It's going to be hard for me to time the bottom. I'm not going to be able to do it, right? But it brings some stability to my account. It allows me to sleep at night. And once the volatility is finished, and we'll see exactly when that is, but I don't think it's going to happen sooner than the 3rd week of December personally. But once everything calms down, I'll remove my hedges and we'll be back to a normal trading pattern. Jared, any thoughts on the volatility?
Yeah, a lot of people are comparing this period to the period of December of 2018, and that was when the Fed announced that they were going to do a rate hike and then later do reverse repo and unload their balance sheet. And there's a similarity there because right now we're heading into the Fed doing the tapering. So because of those two things, sort of. I know there's also Omicron and there's other things too, as you mentioned, overenthusiasm, but there's a kind of question of, is the Fed potentially going to change their mind or maybe even accelerate the taper if Omicron accelerates supply chain problems? There's a lot of uncertainty on that front.
Yeah, personally, I've been vocal about this in the VIP community that when Omicron came out last Friday on Black Friday, I said that was kind of like a false flag. That's not really why the market's dropping. I had already anticipated a market drop due to inflation concerns, specifically higher interest rates, supply chain concerns. So you may see some things that appear like they're correlations in the news, like, hey, over the weekend we're getting news from Fauci that the virus may not be as bad as they thought. Tomorrow could be a green day, but that's just because Friday was a red day. I mean, that's what I think about it. I don't think this has nothing to do with nothing. That's what I think. I think it's just all excuses. And there was never going to be any more lockdowns. There was lockdown fatigue in the United States. So really didn't make a difference whether it is severe or not severe. Economically, it was going to be treated the same way. That's my opinion. Everyone has their own opinion. But that's the way I'm trading it. I think the comparison you bring to the growth stocks crash last February, I believe it was, is, you know what? I almost see it as a continuation of that. If you look at the growth stocks back then, they never really recovered. If you look at Cathie Wood's RK, that's an awesome proxy for the growth stocks. And it's just been down. She never recovered her February highs at all, not even close. And now it's just continuing to go down. And higher interest rate is kind of like that. What popped the bubble over here? Because a lot of these growth stocks that are not making money just look really, really overvalued. Some of them I got killed on, like DermTech. We're talking about lots and lots of billion-dollar plus companies that they barely have any revenue right now that are trading like 50 times revenue and years away from a profit. And the problem with this is when you have a rising interest rate environment, Wall Street doesn't really like that because the companies may need to access debt markets in the next couple of years, to grow their business. And debt's going to get more expensive with rising interest rates. And that's kind of the catalyst which caused the bubble to pop. And, one of the reasons I was pretty bearish going into this crash the last couple of weeks is because individual stock charts were terrible. If you looked at the major indices, you're like, yeah, we're holding up. The QQQ is holding the 20 DMA. The SPY's holding the 50. Not a big deal. It doesn't look like a big correction. But if you looked up individual stocks, especially growth names, these charts were terrible. They were breaking below, first the 20 DMA several months ago, and then the 50. A lot of them, already broke down below the 200 DMA even before this recent market route started. So to me, that was like a hint of what was to come. And I'm like, the Qs are not going to hold it. This happens every cycle over and over and over again. People think like, no, Apple's an exception, Amazon's an exception, Square's an exception. Eventually it gets to everything. So that's what we're seeing now. So, for me at this point, I'm really watching the technicals. I think especially of individual stocks that are in between the 50 and 200 DMA, there's a lot of room there in a lot of these stocks. So you got to be really careful. I wouldn't be surprised to see a lot of these stocks come down much more. Speaking of, we'll get to in the show 8:30, GameStop and AMC broke below their 200 DMAs, which is proving to be devastating probably for a lot of Redditors. And I'm going to postulate that perhaps DWAC and CFVI and the whole ecosystem of DWAC stocks might become the next sector that takes over as the meme stock. So we'll talk about that at 8:30. Jared, any other thoughts on this? We got 5 minutes left on the market, and then we go to XSPA. So If you
Yeah.
have a question on the market or market volatility, go ahead and ask for the mic. Go ahead, Jared.
Yeah. I think that overall, I still feel long-term bullish. I agree with you that the pain might last for another few weeks, but I don't necessarily think that we're headed to a 2000 style .com bust. The reason why I say that is valuations are still well below where they were back then, and the other thing to keep in mind is that um, we still have a huge amount of, quote unquote, dry powder in this country. I was looking it up before this call, and banks currently have $17 trillion of cash that they're not using. That's a huge amount of money. And where is it really going to go? Is it going to go into bonds that give 2% interest in a high inflation environment? It's probably not, no. So there's only two real places that it can go, and that is equities and real estate. And real estate's also really high. So yeah, I still think that over the long term, over the next like 6 to 12 months, we're still in a bull market. Maybe the high growth names that you mentioned that aren't profitable won't quite recover as fast as some of the other names, but I still feel like that cash has to go somewhere. And as I like to say, there is no alternative, right?
And regarding the high growth names, I also want to point out it's not just the high growth, but it's the micro caps and speculative stocks. They all get grouped in together.
Yes.
Yeah, kind of regardless of their valuation. We're seeing a lot of these micro cap stocks that were story trading favorites getting clobbered right now.
Mm-hmm.
And this is what I've seen for 25 years. I've seen micro caps always grouped in with the speculative stocks and always grouped in with the growth stocks in terms of share performance, even if it's quote unquote undervalued. So that's something I'm a little bit fearful of for people who are really deep into microcaps. I am. I've made a ton of money and I've outperformed the market focusing on microcaps the last 2 or 3 years.
Mm-hmm.
But I'm going to be a little bit more cautious coming out of this little market crash in December. I think, I'm going to reallocate some of my money out of stocks like at the right time, not right now, but just I still have SMSI, one of my favorites, but for as an example, SMSI is an undervalued microcap company, but for example, coming out of this crash, I might want to own more Global E, GLBE,
Yes.
high quality technology stocks. In my experience, they're going to bounce back. I'm talking about over intermediate to long term period. There's going to be a microcap bounce for sure. This is what we call the January effect. We're talking about it tonight. Microcaps getting killed right now because of the tax loss selling. So they'll kind of outperform here, I believe, third week of December through January, but it may not be sustainable. If you're looking for sustainable bounces, I'm eyeing Square. I'm not ready to get in Square yet. I think it has more room to the downside technically, but I'm looking at companies like that. I like microcaps. I think one of the edges story trading has is the ability to crowdsource research and social collaboration on microcaps. So I'll probably be still allocated like 50% towards microcaps, but I'm probably going to go something like 30% towards larger caps, pick up some cheap large caps here in the next few weeks.
Yeah, same thing. I was primarily in small and micro cap companies last year, and I have already started to transition towards more mid caps now, and I definitely don't feel like I definitely don't feel like going away from that. There's definitely I guess this is perception that the smaller the company is, the bigger it could move. But I mean, we've seen some mid-sized companies still capable of doing big moves. So I don't think you're giving up that much by focusing on them.
Yeah, sure. I got 1 minute left before moving to XSPA, but I think one of the allures of the small caps is not only the potential perception of a bigger share appreciation, but it's the ability to feel you can have a knowledge edge because analysts aren't covering this, and you can leverage crowdsource research with other retail investors to find out kind of like almost inside information, that analysts don't even have. So I don't disagree with that. I think there is something there, but I'm telling you, after 25 years of watching microcaps, they usually the default kind of condition for microcaps is to be perpetually undervalued. You see microcaps getting to their fair value or overvaluation in the later stages of the bull market. That's where you see it. I've seen it over and over again. When the big caps get frothy and people say, where should I put my money? They start looking at microcaps. And now when you have this wealth destruction and a crash, the first place people think to put their money is going to be the big caps, and the last place they're going to look again is going to be the micro caps. And I don't know, maybe it's an interesting kind of study for people to look at, but over like the last 30-year period, what's the average kind of valuation of a microcap compared to its quote unquote fair value? I would say a majority of the time, the default state of a microcap is to be quote unquote undervalued. And I personally believe that's because there's a lot of risks in microcaps that people don't necessarily appreciate, that the average investor, I would even say sophisticated investors, avoid because of the rampant risk, especially execution risk and competitive risk that microcaps run into. So we're right at 8:15. We're going to move to XSPA, and microcap. Look at that. This microcap actually became my largest position quite suddenly, and it became a VIP pick. So how it happened was last Friday, Black Friday, we had the Omicron variant, and I started looking at these COVID stocks. And an interesting thing, I didn't look at COVID stocks during Delta. Wasn't interested at all. This time I was, and not because I thought the science was different. I immediately I said, "Hey, this is a nothing burger, right?" But sentiment and perception wise, right? There's something I talked about stacked catalysts on the Benzinga show in relation to XPOD, but there's also something in terms of kind of synergistic sentiment. When there is negative market sentiment and people are fearful about the market overall, that tends to also roll over into fear in other things. And the fear of COVID will be exaggerated in a down market. And I've also noticed in the past that when the market is really down and there's some COVID things in there going on, that COVID stocks can almost act as a market hedge, and they tend to do well. Even you might even see this still, not only last week and the next couple of weeks on market red days. You'll see, even if there's no news about COVID, it's just a psychological thing. On market red days, you'll see people putting more money in COVID stocks. They're like, fear, let me be fearful about COVID stocks, and fearful about COVID, and they'll buy COVID stock. So that's one of the reasons I said, you know what, let me look at COVID stocks last Friday. So I was trading APT, I was trading Lake, I had XSPA on my list. I jumped into XSPA, and these were meant to be just day trades for me. But I liked the technicals and the strength of XSPA last Friday. I held it, and then after the close on Friday, I started doing some research, and I saw the stellar Q3 earnings report. I saw the awesome Q3 earnings report. I'm like, damn, there's actually fundamentals here, which surprised me because I thought of this company as a company that was like a serial diluter that wasn't making money. That's what I thought. And by the time Monday night came around, I made it a VIP pick. I made the presentation to our VIP community. And then subsequently, I was invited on Benzinga Thursday to present the thesis. And I was buying XSPA Friday, Monday, Tuesday, Wednesday. It's now my largest position. I just feel like everything's aligned in terms of stack catalysts, the fundamentals, the technicals, the sentiment. Although I will concede, given some of the news today on is Omicron, as severe or not, that could be a little bit of a headwind here. But I'm confident holding this as a core holding right now, especially because we saw the high institutional buying over the last 6 months and the high short covering over the last 6 months. In my opinion, this turnaround is real. Jared, comments. And I know we have a lot of people from the Telegram fund group here tonight. If you want to leave a comment or ask a question, go ahead, hit that mic button. We'll talk to you about XSPA. We got another 10 minutes on XSPA before we move to the next topic.
Yeah, I definitely think this has a huge amount of potential for a short-term trade. One of the things that we were looking at was the warrant structure. There's some amount of warrants overhang priced at 1.7. About half of them have been used up according to the most recent filing. So it's certainly possible that if there's some more, bad news about Omicron, if those warrants finally all get exhausted, then the stock could move pretty quickly. So yeah, that's another good reason to sign up for our newsletter, because if you are on the paid newsletter list, we will put out an alert immediately if we have some decision, like let's just say that the stock does rally or for whatever reason, and we decide to officially close that as a VIP pick, then we will let our paid subscribers know immediately.
And speaking of that, we nailed 2 VIP picks recently in terms of the entrance and the exit. It was GoPro and also Matterport. wow. I mean, did we nail the entries and exits? I'm so proud of the team doing that.
Yeah.
And, we did that using the 4 pillars. The exit from Matterport, Akil, who presented the stock, he used fundamentals to say, this is getting out of hand. Let's get out of Matterport, close the pick on the sheet. And he was right. And in terms of GoPro, with a little nudge from myself, Julian decided to close that GoPro pick because the sentiment on GoPro, very, very poor. And I didn't think it was going to get into the high teens where some of the fundamentals believe it was going to be. There was some resistance in the mid 12, so we rode that from like 10.20 to 12.50 or so. In a market like this, we're nailing GoPro and Matterport with like 30 to 50% gains in a matter of 1 or 2 weeks. That was incredible, man. I mean, very proud of the team on that.
Yeah, I think that especially in such a challenging environment, like this one, as you put it, the chop environment, timing really is everything.
And you know what? That is what story trading is about, actually. We look at fundamentals, and I like to trade companies with great fundamentals. So if the trade goes against me, first of all, it's not going to go very far against me, number one. And also, at story trading, what I try to do is to time inflection points. That's the whole point of looking at a stock holistically. So if you're looking at a stock one-dimensionally, just technicals, maybe you have a 50-50 chance to catch the bottom on support. You might be right, you might be wrong. If you're looking at just fundamentals, man, I can't tell you how many fundamentalists are frustrated that how come this stock can rebound that's so cheap. But when you combine fundamentals and technicals and sentiment and catalysts and look at a stock holistically, you have a chance to catch inflection points and get these huge runs in short amounts of times. Like that's how I did Air, which was the big one that put us on that. AEHR, man, I bought that at 270 and I rode it all the way to 25 bucks. And I did that I wasn't just looking at the fundamental. A lot of the fundamentalists in our community were like $16, $17, get the hell out. I was like, no, there's no reason to get out. Look at the sentiment in the EV sector. It's freaking hot now. There's IPOs going on. Like Lucid is starting to trade. You got that other EV company that went public, Rivian. You had all the Tesla performing really well. I'm like, EV is hot. Why the hell would he sell just because of fundamentals? Not only that, but it was above the 20 DMA the whole time. So I'm riding this thing all the way up. As long as it's staying above the 20 DMA and as long as the EV sentiment is super high, I'm in there. Now, I tried to time the top of the EV sentiment, and I guess you could say I got lucky. I'm like, it was the week of the Rivian IPO, and the Monday morning after Elon Musk said he was going to sell 10% of his Tesla shares. So I'm like, that's it. I got out. I called it, put it on Twitter. We marked it off of our spreadsheet at 25 bucks. And I also saw a technical reversal signal on the Friday. And then a couple days later, I warned people on Twitter Spaces, this thing's touching the 20 DMA. If it doesn't have a big bounce tomorrow off the 20 DMA, it can drop several more dollars. And that call ended up being right. Not always going to be right, but I'm just giving these examples that when you combine technical, sentiment, catalysts, and fundamentals, you can, I believe, successfully time stock trades based on inflection points. That's always been my strategy. It always will be my strategy. And I'm happy to try to do that with our 4 pillars.
Yeah, I'm super glad that we have the track record that really proves it's working.
We got 5 minutes left on XSPA. Hey, if you have a question on XSPA or a comment, hit that mic button in the bottom left, and we'll get to your question. Anything you want to add on XSPA? We got a schedule. We got these tweets going out at 8:30. We're going to go to DWAC. I'm very excited to talk about DWAC, CFVI. So
yeah,
any other thoughts on XSPA?
I think it's really interesting to sort of talk about the different COVID testing stocks. I know we had a trade of the week competition, and the winner picked QDEL, which is another COVID testing stock. They do at-home testing. XSPA does testing at airports, and so I think it's sort of interesting because it's very, very different than looking at a stock like Moderna or Pfizer or something, because those stocks really need, if you need a new medication or a new vaccine, that's very, very different than needing a test at a specific location. Because even if it turns out that Omicron isn't as severe as Delta in terms of disease, testing may still be a super important factor. So I really like that particular angle. I feel like it could have um, less downside than something like Moderna.
Yeah, and by the way, you mentioned QDEL Trade of the Week.
Mm-hmm.
Congrats to Shmuel from our community who won last week's Trade of the Week competition with QDEL.
Mm-hmm.
So congratulations on that. Let's see what else I can tell you about XSPA here before we move to the next topic. Let me pull up a chart and give you my quick analysis. I'll tell you what a few people we collaborated with on XSPA are saying about the chart. Actually, I think it was Vince, who was the researcher of the week. Yes. Vince, who's the researcher of the week, has given us great charts. And, we also consult with Rexman78, I believe it is on Twitter, on his charts. And they're both really in agreement with XSPA that then you have two resistance levels. You have $2, then you have $2, which is resistance. Then you have $3, which is like a breakout resistance, right? If it breaks $3, you can get what Rex calls like a mini supernova, which is maybe something like a move to $7, $8 very quickly. This is a very slow mover right now, trying to break two. It may continue to be a slow mover, in the 2 to 3 range, but then it can potentially get explosive above 3. But to the downside, I'm seeing the 200 DMA here is around 158. But you did have recently a bullish cross, the 20 over the 50, and you'll have a bullish cross this week, Monday or Tuesday, the 20 going over the 200. So that's all good. And if the stock stays where it is or trends a little bit higher, you'll see a golden cross of the 50 DMA crossing over the 200 DMA. So those are all positive things. The RSI is starting to pull back from 70 now down to 63, 64. So I do think there is a potential for some downside here back to about 160. And that's where we're at right now. We're in the range of 160 to 2. And if it breaks 2, you'll have a much faster move hopefully to 3. And if it breaks 3, boom. So that's where we're at with XSPA. Hey, Ashley joined us. How you doing, Ashley? Glad to have you on board. Vince, you're here. Hey, congrats, Vince, on winning Researcher of the Week. Really enjoyed your charts. Who else we got here? We got Neil. We got lots of people from our community. Joshua, John, good to see everybody here. All right, we got 2 minutes. Go ahead. If you enjoy the content so far, click the tweet button. In 2 minutes, we're going to get started with DWAC, CFVI, and acquisition of Rumble. We'll talk a little bit about GameStop and AMC. May have to start a little bit early, fill up this little space. Jared, what do you got for us? What can you tell us? What else is going on? Fill a little bit of 2 minutes here before we get into the next topic.
I think what's really most interesting to me about some of this price action is we've been talking about the Fed and rising rates, but what's so interesting to me is that even though we're in a period we're supposed to having rising rates, and Powell did mention accelerating the taper, rates have actually gone down during the red days. So even though you have an expectation of tapering, and even though you have an inflationary environment, you still have people buying bonds that are giving almost no interest rates, like negative if you account for inflation, while people are panicking. That's really interesting to me because it shows that either people don't have that much faith that rates really are going to go up, or I don't know exactly. There's some sort of paradoxical reaction happening there, and I think that's one of those things I wish I understood more. So if there's someone who's like an expert in quantitative easing or something that can explain why that's happening, but I'm always sort of keeping an eye on that. That it's not like what happened in March, where you had tech fall as rates went up. You're actually having tech fall as the rates are going down.
Well, appreciate those thoughts, Jared. Thank you very much. And with that, we are going to move on to our next topic. Listen, I want to hear from people in the community. If you have an opinion on CFVI and the acquisition, the merger with Rumble, go ahead and raise your hand. We'll get to you. I want to hear what you think about that and where you think this stock is going. But first, let's look at GME and GameStop and AMC, okay? I've been watching this for a while as a proxy, an indicator for basically the meme stocks and for retail to get wiped out. I mean, it's been amazing how GME has held that 200 DMA for a long time. Long time. Go pull up that chart. And so resilient, right? And that resiliency, I'm sure, caused retail investors who made a lot of money in GameStop to keep buying the dip, buy the 200 DMA, take more risk, get into call options. I am 1,000% sure that happened. And when you see the break of the 200 DMA in these market conditions, along with AMC, that means a lot of retail holders are getting completely wiped out over here, okay? That's not good for a lot of speculative stocks and for meme stocks and for these social media influencers who have a lot of followers. Not only are those two stocks wiping people out, but all the stocks kind of in their ecosystem probably getting wiped out and people losing a lot of capital. And I want to postulate and propose to the community here that we may get that meme stock excitement rotating into a different sector of stocks. And I think that might be DWAC and the ecosystem of DWAC stocks. So I say that for a couple reasons. First of all, it's new. Once people get destroyed by like a GMC, GameStop, and AMC, it's going to be kind of left for dead for a very long time, in my opinion. So DWAC and CFVI, these are just getting started. But the other reason is that it's new investors, right? I know that for sure with DWAC. He had a whole bunch of new people coming in to buy DWAC for political reasons. I think you're going to see the same with CFVI buying Rumble. I've heard, I haven't seen it firsthand, but I've heard, on Fox News, you got Don Bongino, promoting this all over the place. If you go to the Rumble homepage, I did on mobile, they're actually promoting the ticker symbol right at the top of the page. This could be bringing in millions of new investors and a whole new cycle of retail investors getting excited and speculating in this kind of meme stock thing. So I'm going to propose that. Let's review what happened significantly last week. First of all, I believe it was on Wednesday, there were rumors that DWAC was going to do a $1 billion pipe, which caused DWAC and Fun and basically DWAC and Fun. The other one's not really. Bean's no longer in this group of stocks because Bean is merging with a what's it called? Hydrogen fuel cell company, right? So it was really DWAC and Fun exploded on that news Wednesday, or the rumor that they're going to be doing a $1 billion pipe, and then the market crashed and it gave it all back and it was hard to trade, and damn, like, oh, the false alarm. That's what it felt like. And then what you had was CFVI, I forgot, was that the same day? I forgot the exact timing, but around then you also had then CFVI merging with Rumble, which is like the YouTube competitor, the conservative YouTube, which is politically aligned with Trump and that whole ecosystem. And that had a great opening, from 10, it went to like 14, but it sold off completely, went back to like 10.20, 10.40. And then two big events happened, Friday and Saturday. Friday afternoon, it came out, and I think it was confirmed that the Trump social network that they're building is going to be using CFVI infrastructure, I believe, for streaming capabilities and other back-end stuff. I'm not sure exactly what, but they're using their infrastructure. That came out Friday afternoon. CFVI started flying Friday afternoon, and it kept on going in after hours to like the mid-13, something like that. And then Saturday, the pipe was confirmed for DWAC, but it wasn't 1.1 billion, it was 1.25 billion. That's going to put a floor in DWAC stock because that was based on a discount to the trading over the last, 10 days, something like that. So you have over $1 billion of money coming in to DWAC. And that money is going to flow through these DWAC ecosystem stocks. Now, we know now for sure CFVI is going to benefit. Not only that, but CFVI is a real company, operating company. Rumble's been around for a long time, right? I believe the merger valued at $2 billion. And you're also going to have speculation that Fun, Mark I'm hearing about, AIAD, another one. These are the three I found so far. Speculation that you could have money from this ecosystem, this $1.25 billion, somehow flowing to these other companies as well. So I think personally, we interviewed Fun management, and I think the relationship with Fun as a sympathy play here is much more solid than Mark. I haven't really found anything about Mark except people say it's related, but when I ask about it, it's very flimsy. It's just like, yeah, there was a picture with like Trump Jr. somewhere, right? So what? But that's the Mark thesis. Fun actually had a business relationship with the Trump campaign, and they hinted that they could support them in the future. And apparently, AIAD also has some sort of product that the Trump website or this new Trump social network is using some advertising. I don't know, but some people did the research on that, and you can find it on my Twitter that there's some association with AIAD as well. So let me hear from you guys. Raise your hand, put your mic on. I want to hear what you think about DWAC, CFVI, Fun, Mark, AID. While we wait for a couple people to raise their hands, Jared, I'll get a reaction from you.
Yeah, this definitely seems like a signal. It's possible that there will be a bounce tomorrow, especially if tomorrow is a green day, and it looks like the futures are showing that tomorrow is. I mean, obviously that can always change, but as of right now, it does look like tomorrow is going to be a green day. So yeah, I expect all of those stocks in those constellation to go up at least for a short time. I think that the sort of the broader question is, if like, you're not in them right now, is that bounce going to fade as this as this event goes into the rearview mirror? And that's the part that's not entirely clear.
We'll see what happens. I think, when DWAC came out, it was all about sentiment. And I think what's interesting now is we have some fundamentals here, right?
Yes.
We had that show that DWAC, if you're buying DWAC at whatever billions of dollars it was worth, and it looked like $50 as a technical floor, the only reason people were buying that was some sort of calculation of, hey, this could be a big TAM. But the real reason was, I just want to support Trump, or I just want to support this social network because, free speech or whatever, right?
Yeah.
That was the reasoning for buying DWAC stock. I think things have really changed as of last week, because now not only do you have another publicly traded stock in this ecosystem that this time it's an operating company with revenue, right? Not only that, but you have another 1.25 billion cash that DWAC is going to have to launch this Trump social network. I have to tell you personally, I'm starting to change my mind a little bit. I've said from very early on that I thought this was just a sentiment play, and that long term, there's like no shot that this social network will have any kind of, success at all. I really believe that. But now with this much money and with, with Rumble going public, I'm starting to change my mind. And I actually bought some of this Rumble CFVI for my IRA on Friday. One of the bear thesis for me regarding DWAC in a world where it was just DWAC alone with a limited funding was that I thought they were going to face a lot of issues with getting their app approved on the Apple and Google stores. I think that's going to be a lot harder politically for Apple and Google now to ban DWAC. I mean, Truth Social, whatever. Is it called Truth Social? Whatever that's called.
Yes,
Truth Social. Yeah. Rumble. I mean, it's gonna be hard, man. You're talking about multiple multi-billion-dollar companies with billions of dollars in capital, and Apple and Google are gonna go out there and say, we're banning you because you have people talking who have an anti-vax opinion or something, and we don't allow that in our networks. I don't think that's gonna fly. I mean, I thought it might, but I'm not sure it's gonna fly anymore just because of money.
Yeah, I mean, I think if they try to, there'll be some way to download it, directly from their servers or something that will sort of circumvent that.
You could do that for Android, I believe, but not for Apple. Can you? Can you do that for Apple?
I think my suspicion is that they'll come up with a way. If you look at the difference between that and some of the other ones like Parler or Gab or whatever, the reason why a ban was so devastating to them was because they were relying on sort of being discovered by people. But I don't think that's going to be a problem for the Trump one. People will just know to look it up if they need to.
Yeah, well, maybe for the first few weeks, but I don't see how you can have a long-term successful business if you're not in the Apple or Google app stores. And I guess my point here is, I just don't see Apple or Google. I think they're going to have a much harder time banning these apps in the stores.
I mean, if I was Trump, I would almost want them to ban me. I would say, look, I was right. Big tech is censoring me. It's too hot for the store.
Yeah, I don't know, man. It's gonna be interesting. I'm surprised we have no questions or comment. We have a lot more people on the show than usual, and no one has any comments. Listen, we got 4 minutes left before we talk about Drio, because we had 2 videos come off embargo for Drio last week, and I want to talk a little bit about the chart and Teladoc and what's going on there. But if you have a comment or question, particularly on Rumble, CFVI, DWAC, or again XSPA, I do want to hear from you. Want to hear, kind of get a gauge the sentiment. I've been looking at the sentiment and the social media footprint of CFVI on StockTwits and Twitter, and it's kind of similar to. I say this with hesitation because the implications of what I'm going to say, I don't want people to get the wrong idea, but I think it is similar to what we saw with DWAC that first night, the night before it started trading, post the merger announcement. I believe there's a chance that this thing can really squeeze. I've been discussing with some of my colleagues. I think like a realistic kind of squeeze for early this week would be maybe in the $15 to $20 range. But I'm going to tell you that I don't think it's impossible that we see a repeat, a DWAC 2.0. I don't think it's impossible that we see multiple halts and this thing like spike into like 50, 100, over $100. I think it might be possible. Be careful. These are high risk things. I will be playing this, and I think I will be playing a little bit tomorrow morning with some of those warrants on CFVI, and we'll see what happens. I probably will be buying dips with CFVI tomorrow. Tiny Diamond, go ahead.
Hey guys, I guess you were just asking for a little input, and I personally was one of those guys that happened to jump in Wednesday pretty hard. I don't know, 4,000 shares or so, and the 13, like a goofball, and then I watched it just obviously dwindle, and then I left it because, of course, I think what you're saying is probably 100%. I mean, we're going to see a bump tomorrow. It's been nothing but publicized, talked about, pushed, and we are talking CFVI. And at the end of the day, yeah, I mean, I don't even know what it's going to open up out of the gates. My hopes on tonight's little talk was hoping somebody had some more information on AIAD as well.
Okay, let me talk about AIAD. AIAD was brought to my attention and brought to our attention in the StoryTrading VIP community by someone who's a great researcher. I've been holding it since the first time it popped, right? When DWAC came out, it went from like 1 to 6 cents. So I bought some when it went back. It went back to like 2 cents. I bought some. I've been holding it since then.
Got it.
I've averaged down a little bit. This is one of those things. It's like a seed. It's like I plant the seed. I can't find a lot of information on this company, so I'm not going to call this a long-term holding. I'm just holding this in case we get a repeat, right? If tomorrow CFVI goes crazy and it halts and people are looking for sympathy plays and money comes into AIAD, I don't see any reason why it couldn't again go to 2, 3, 4, 5, 6 cents, and I'll sell on a pop like that. But I will tell you that a couple people have brought to my attention that there is some sort of relationship there. It's not pure political speculation like we have with Mark, M-A-R-K. There's some Nucleus software, I believe, and the couple people who have checked it out said that that Trump Social is using. I don't know where they're getting this from, but it's people I trust saying that they are using the Nucleus software from AIAD. Sorry, that's all I know. It's hard for me to find
and that's what I've read as
well. Have you found anything on AIAD?
Me personally, no, I haven't found much at all. Again, there's not a lot. I mean, a couple of the people, I think I probably follow a few of the same people that we're probably talking about. And yeah, there's information, but I mean, I don't even know where that information came from. Of course, you can find that typical stuff just because it's been posted in the, and on the web now. So that's what's popping up.
there was an SEC filing Friday. They did get rid of like $650,000 in debt. It was something like $400,000 in cash and like $250,000 in stock. So I don't know if people want to read into that. Hey, it's a good thing they're getting rid of some debt. The debtor decided to agree to take some stock. I don't think that they took the stock at a discount. I don't think they took extra stock. They took the amount, a cash equivalent amount. So maybe they think the stock's going up, or maybe they're going to take those millions of shares and dump it in the open market tomorrow or this week. I don't know. I don't know what it means, but there was that filing on Friday.
Cool. Yeah. I think, I'm still holding, I think today I've got about 3,000 shares of CFVI, and I was probably going to jump pretty deep at PM open this evening just to kind of see what's going on. All of it's speculation, but pretty good feeling that I just don't know what it's going to open at. Does anybody have any insight on what maybe a thought process
Personally, I think because it closed the after-hour highs on Friday, and because there's a lot of buzz over the weekend, I think you're going to see a gap. You get sometimes exaggerated moves in the 4 a.m. to 7 a.m. sessions. I wouldn't be surprised if you saw some sort of crazy exaggerated move 4 a.m. to 7 a.m. and then you may get a pullback at 7 a.m. But I would not be surprised if this thing is trading between $15 and $20 sometime between 4 a.m. and 9:30. And
I agree with it 100%. 20 was my mark all day long.
Yeah, 15 and 20 is kind of what I'm thinking. Personally, I may add more if it's in the $12, $13 range at some time pre-market. I may add more on that. And if it gets to like the high teens or close to 20, I'll probably shave some off.
Yep, I would the exact same play. So, and then see what happens. Like you said, who knows in the next 2 days if it ends up going higher. But I know you got other stuff to talk about.
All right, awesome. All right, guys, we're going to move to DRIO. If you do want to add another comment on that stock or any other stock we talked about tonight, you can go ahead and ask for the mic. We'll get to you. So let me talk a little bit about DRIO. This is my VIP pick from a long time ago. I've held this for like 2 years. I've been bullish on it throughout since about $7. I peaked at $30, and it's now at like 15. So little bit like tedious position here because this is a growth stock that a lot of people say is quote unquote overvalued, right? But they are coming in with a head of steam into 2022. They announced 50 new employer contracts this year, the bulk of them coming in the last 2 or 3 months. But this thing broke below the 50 DMA on Friday. I'm going to be honest with you, this is my second largest position. I'm not going to pump it up and lie to you. That's not great in this environment where growth stocks are getting hammered. I mean, it's basically been doing some magic levitation right now because TDOC has been getting killed. And traditionally, this is traded within a similar trend as TDOC has. TDOC's all the way to $93. It is now below where it traded at, well below, like $15, $20 below where it traded at when COVID hit, right? It was around $110, $120 when COVID hit. It went all the way to $300, and now it's at $93. I mean, if you look at that, people can look at DRIO and say, hey, DRIO should be at like $5 now, but it's at 15, which is very telling so far. A lot of relative strength here in this digital marketing sector. I met with the CEO in person in New York. I've interviewed him many, many times. So I am still very bullish on this name, but I will concede that it's a growth stock in a market environment that's not good for growth stocks, and it's a little bit scary looking at that chart. I am going to personally, I'm going to tolerate the pain. I'm going to tolerate the volatility. I'm going to stay long because I have a feeling this can become a market leader in the digital health space in 2022. Before we had that company Teladoc bought Livongo. Livongo was the market leader at the beginning of COVID, and it flew 10 times, and then Teladoc bought it out. And Teladoc has been stumbling with execution issues and issues with the merger with Livongo. So what do you have left in this space? Is basically Teladoc, which is supposed to be the market leader, that's getting crushed, and then you have Dario, which is the only digital health stock that's really holding up right now. Look at OnTrack. OnTrack has been decimated. So I'm kind of hoping a little bit here that this market doesn't kill Dario because it's a growth stock. But I have reason to be very optimistic because of the relative strength and all the contracts that were recently announced and a No, they're planning on that, as they've announced, more insurer contracts to be announced in the first quarter of 2022, which could bring in tens of millions of dollars of revenue in a year for Drio. So listen, I know everything there is to know about Drio. If you ever got a question on it or a comment on it, hit me up and I'll give you my thoughts on Dario.
Yeah. I want to talk a little bit about Teladoc. If you are I am so bearish on Teladoc right now because it is stuck between a rock and a hard place. Think about it. There's only real two ways for this thing to go. Either the Omicron thing gets worse and the panic continues and it keeps getting sold off, or it turns out maybe Omicron isn't so bad. Maybe the pandemic is ending and we'll get back to reopening. And by the way, like, what use do we really have for a company like Teladoc? Like, I feel like no matter how things unfold, it's going to have a potentially really grim future, and it just does not have management that people believe in. Dario does have management that is doing a good job. I think they've had some, I don't know how to put it, communication issues in the past, and people were a little concerned earlier this year because they took a little longer than they said they would on signing some contracts, but they've gotten a lot signed recently. And yeah, short term there could be more pain, but long term they do seem like they are in a pretty good position to keep growing.
Teladoc, going back, and you said you're bearish. Looking at the technicals, it does look like there is some strong support, I would say, here around $86. It's at 93 now, so I could see it dropping a few more dollars. Fundamentally, I don't know the answer to that in terms of their financials and things like that, but I think this is a company-specific issue, Teladoc. I don't think it's sentiment related or COVID related. Maybe they overpaid for Livongo. I'm hearing they had integration issues with Livongo, but COVID or not, I think digital health is the future and it's here to stay. But I really don't know. I'm hearing different things about Teladoc business model not being as good as the Livongo or the Dario business model. So I mean, that is one ugly chart.
Yeah,
I'm glad I got out when Richard Chu got out. Richard Chu, we invited him to speak, is a very important, influential social media person in this digital health space, and he got out like 3 quarters ago when he cited the execution and merger issues with Livongo, and I followed him out of the trade, and thank God I did that.
Yeah, I don't think I would buy Teladoc pretty much at any price. I would want to wait for them to bring in like a new CEO or something.
I want to talk to you more about that. I don't know, later, offline.
Sure.
But yeah, at this point, you know what? I'm good with Dario. So it's 8:53, guys. We have our VIP show starting in 5 minutes on Zoom. We'll be talking about tax loss selling and the January effect. We're going to work as a team to identify a watch list of stocks that we may want to be buying here over the next 2 or 3 weeks. So if you're not a VIP member, you can head over to StoryTrading.com. We only have a few spots left in our VIP community. It's quite expensive because we are in WhatsApp and we're limited to 250 people. So for the last few spots here, it's $100 a month. But if you become a frequent contributor in our community, if you make VIP presentations, we do give out some complimentary subscriptions to people who are high value contributors, along with some discounts. And we also recently launched our paid newsletter. If you go over to our Twitter profile and hit subscribe, you can get into our free newsletter, and you follow the links from there. There's a $35 paid newsletter, which gives you access to our recorded VIP events. So tonight, for example, we'll be recording that on Zoom. And after midnight tonight, right at 12:01 a.m., our paid newsletter subscribers will get a link and a password so you can listen to the replay. There's about 1 to 2 events that we record for our paid newsletter members at that affordable $35 a month rate. You can also get to that just by going to StoryTrading.com and click VIP upgrade, and you can find the link for that $35 plan. Guys, that's all we have tonight. I got to jump off and get ready for a Zoom.